Welcome to the latest edition of Fitch's Virtual Investor Series. I'm Rui Pereira, the Global Head of Structured Finance, and today I'm joined by Hilary Tan, Senior Director in Structured Finance, and today we're going to discuss structured finance in China. So Hilary, welcome, and let's get right into it. Give us an update on performance.
Right. As you know, the rated portfolio for Fitch in China consists of auto ABS and RMBS. And as you know, the auto ABS makes up the vast majority of our rated portfolio. So I'm going to start right there. So the annualized gross losses that we have seen for auto ABS actually is weaker in the first quarter of 2023. However, the early delinquencies, we have seen some leveling off and some reduction. So there is call for a little bit more optimism there. As for RMBS, the annualized gross loss, again, is actually at a weaker level. It's about 0.5%, which is actually about a historical high level. And we think it's because of the remnant effects and the lagged effects of the containment policies that we have seen in China. And as you know, the dramatic abandonment of the policies in China back in December 2022. So we still think that there's a lagged effect there.
Okay, and what's the outlook for the remainder of the year?
We believe that the credit deterioration of auto ABS and RMBS is likely to be improving in the coming months. We have already seen early delinquencies leveling off. We have already seen 1 to 30-day DPD coming down, so which is an indication that we should be seeing annualized defaults coming down as well in the coming months. And post the economic recovery that we have seen in post-pandemic China, Fitch has actually forecast a 5.2% in GDP growth in 2023, which is actually surprising to the upside since we had our forecast back in 2022 of 4.1%. So the economy has done relatively well in the first quarter of 2023. However, the 2023 forecast is not going to be as pronounced as the recovery that we have seen in 2021. That is mainly due to the continuous weak state of recovery in the property sector, as well as the subdued external demand that we potentially will be seeing for GDP growth. Fitch is projecting a 0.5% forecast for the auto ABS in the next 12 months. And for RMBS, it's around 0.45% for the next 12 months. This is slightly elevated for RMBS compared to the to 0.3 that we have seen historically.
Okay. And what other things should investors watch out for going forward?
I think for auto ABS, the weak sales that we have seen in the first quarter it's plunged 13%. I think is something to watch. We think that the recovery in sales may be hampered by the fact that there is a price war going on, and there might be consumer sentiments which may contribute to a wait-and-see stance. And sales, therefore, may not be as rosy. The fact that sales is going to be weaker might induce us to think about whether the financiers will be looking to loosen underwriting to entice purchases. That's one thing. So similarly, for RMBS, mortgage growth has been very weak as well. And then the property sales have been very weak as well, as you know. But we have seen a little bit of recovery in the first quarter, so 0.7% price growth in the new home price index, although that's at the backdrop of a 5-quarter slippage. So we are seeing a little bit of improvement, but we don't think that this will be a very even recovery. We think some of the economically weaker provinces may not be able to enjoy the sustained recovery demand.
Okay. Thank you for your insights, Hilary, and thank you for joining us. For more information on China structured finance, please visit fitchratings.com. And if you have any questions on the topics that we discussed today, please send an email to the address on the screen. Thank you all for watching.